Alongside me now is Julian Callow, Chief European Economist at Barclays Bank. Julian, we were hoping that really the debt crisis would be behind us. We had this comprehensive package just 5 days ago. The EU leaders were quite happy to show that there was a political will. Now Portugal is back in the mix. Are we going to have a bailout, or are we going to have it soon? And when we have it, can we put all these worries behind us?
It does look clearly very likely that you're going to have some rescue package here for Portugal. Clearly, the timing of it is a bit complicated because it's likely that there'll be elections. They may not be held till the end of May, for example. So quite how you coordinate things, I think at a minimum you would want the Parliament to approve the austerity measures that it's put in place, really, because I think from the side of the potential creditors to Portugal, they need to have the assurance that the plan is going to work. And that actually throws up what I think is a very interesting development for this year, which is that we are starting to see more in the way of popular backlash against the austerity measures.
Much more.
You've
This
seen
is
in
a
Greece,
concern, Julian.
in Ireland and in Portugal. Exactly. Now, I think it had been assumed that because there isn't really effectively any option if you look at it in a hard-nosed economic sense, that countries would just plough ahead with the fiscal austerity. And, in the UK, we've got a good example where the government is doing just that. But nonetheless, you are putting these economies, particularly when they can't set their own interest rates, they can't devalue, you're putting them under enormous levels of stress, really. When you think about the scale of the fiscal tightening, for Portugal now it's going to be 5.3% of GDP for this year. Ireland has been planning on around 4% of GDP.
But do you feel comfortable? I know we've been covering this debt story for almost a year and a half. And do you feel comfortable that actually we're making progress, or is it just going to be one country after the other? Yesterday we were talking about Spain. Okay. Where does it end? I mean, when can I, get you on the show and say, actually, we have all these worries behind us? Maybe at the end of the year, maybe. I say maybe because I think it's a really decisive period that we're going through. It's not just about getting the legal arrangements in place, the parliamentary approvals for the ESM, for the Portuguese plan. It goes a lot beyond that. What it's about is whether these countries actually can achieve their fiscal austerity measures. They are attempting something that is gigantic by the scale of history of advanced economies. And last year, for example, yes, we saw Greece tighten fiscal policy by 8% of GDP, but the economy actually contracted by about 5% in real terms. And that tells us that there is a big cost involved as well, and it's putting a lot of upwards pressure on unemployment. So the question is still, when you have these highly indebted private sectors in some of the economies, alongside the public sector restraint, can it be achieved when they lack competitiveness? And how concerned are you that actually interest rates will go up sooner than we're ready for that? I mean, we have austerity measures, exactly, we have these interest rates always on the brink of going higher.
I don't get why the ECB wants to plough ahead with an interest rate increase. Now, okay, look, if it was just Germany, France, Italy, the Netherlands, Austria, whatever, fine, go and raise interest rates, go and send a signal here that you're determined to keep a strong signal there against inflation. But when you've got this kind of crisis going on, really it's astonishing that the ECB wants to raise interest rates.
But are you not concerned about inflation? We were looking at the price of oil, 105.
Look, it's external pressures. Okay, but you've got to consider the security of the euro area as a whole. Why not just hold off a little bit? Because look, these economies, they have enormous private sector debts which are linked to Euribor, which is linked to the ECB's policy rate. So if the ECB is going to be raising interest rates, even though it might not be much, it really doesn't help. It's very unwise in my view.
Yeah, and it might actually send the wrong signal. Julian, thank you so much for coming in. Julian Callow there.